So what other loans are there besides conventional loans? Well, there are a lot of different loans that you can choose from that you may find are better for you, such as FHA. FHA only has a 3.5% down payment requirement, which is great, but it's offset or counterbalanced by a couple things. When you finance more of the property, the mortgage is going to cost more, which means it's harder to cash flow. Just simple math. Your rents aren't going to go up, but your costs go up, so your profit is lower. Now, the mortgage insurance is also a requirement of FHA loans if you have under a certain down payment. So if you're doing the minimum down payment at 3.5%, you're going to be stuck with mortgage insurance. Now, FHA is great because if you don't have a lot of money available, you can still buy an investment property, 1 to 4 unit rental property, for example. But you are going to have to build in those additional costs. And the other thing is you're required to reside at the property for a period of time. So sure, you could purchase the property, move in and fix it up for 6 months, and then move out somewhere else. That would be legitimate as long as the intent when you purchase the property is to reside in the property. Now, closely related to FHA is the 203K loan, which is a rehab loan, basically. Still has the same 3.5% down payment requirement, but it is of the purchase price plus the rehab costs. So, if it's got a $100,000 purchase price, the FHA loan would make you pay $3,500 down. If it's a $100,000 down purchase price plus $100,000 rehab cost for $200K total, your down payment would be $7K. Other than that, it's very similar to the FHA loan. There's also a VA loan. If you're lucky enough to be eligible for a VA loan, you can get a 0% down payment. Your fees can also be financed into the loan. And if you're 10% disabled or more, your VA fee can be completely waived. The funding fee, that is. So the VA loan is actually a true 0% down loan that you can get on the property. You are required to move into the house. And there are some restrictions. You can generally only have one VA loan at a time. And there are some strict inspection requirements for the VA loan, much more strict than FHA loan inspections. They have to be good livable condition properties for you to qualify with the VA loan. Oh, an interesting thing about VA loans is they're assumable. So you could sell the loan to somebody else and have them assume the payments at a low interest rate, should interest rates go up. This is unlikely to need it, but if interest rates were ever very high, say they reach 10 or 15%, having an assumable loan is actually very good if you're locked in at a low interest rate.